Welcome back to the Kudlow Report. A big story breaking today. The SEC charged former Goldman Sachs board member Rajat Gupta with insider trading. Gupta charged with sharing secret information about Goldman Sachs with Galleon founder Raj Rajaratnam. The big secret? Warren Buffett was going to invest $5 billion into Goldman at the height of the financial crisis in late 2008. There's another allegation. Rajaratnam bought shares just 1 minute after a phone call with Gupta and then sold them right after the news broke. But our question is it really a cut and dry case of insider trading? Let's talk. We have John Tamny, editor of Real Clear Markets and Forbes Opinions, along with Joe Tacopina, criminal defense and trial attorney with Tacopina Seigel and Toronto. Joe, start with you. Is this as cut and dried as it appears to be? After all, it's only a civil suit by the SEC.
It's a civil suit. At this point, it doesn't mean it can't ever turn into a criminal indictment, by the way. And is cut and dry as it appears to be. I mean, I think that remains to be seen. There is a presumption of innocence that I'd like to believe we still adhere to. That being said, there are circumstances that look very suspicious. The flurry of calls over an 18-minute period, the activity from Gupta.
And he was the director of Goldman, and so he had access to, quote-unquote, material, non-public information.
Okay. Not only that, he was an investor in Galleon. Okay?
Right.
And
so
that's
it was in his self-interest.
So it's in his self-interest.
So he had motive.
He clearly had motive. I mean, if Galleon, and don't forget, he was very close with Raj. I mean, those two had done other deals before.
All right. Let me get John Tamny. John, you've heard the distinguished defense attorney talk about this. John, you have a different take. You don't even like insider trading. How do you react to this story? Is it cut and dry? Should Gupta be fined, prosecuted? Raja Martin, too? What do you say, John?
Well, I just think it's all immaterial. I think we should be embracing Galleon Group for being market sleuths and bringing necessary information to the marketplace. And we should say about Gupta that he is, in fact, to paraphrase Lloyd Blankfein, doing God's work by providing that information. We live in a world of limited capital, and the quicker information reaches share prices, the less likely it's going to be that capital is going to be destroyed. The problem here is that there are insider trading laws which are anti-information, which means they're anti-growth.
Mm-hmm. John, what do you say? No, go ahead, Joe.
They're not anti-information. They're pro-balance. And if the market doesn't have balance, and if there is an imbalance of information in the market, people are not going to trust the market.
What does that mean, balance? I don't understand balance. You're either in or you're out. No, you're either legal or you're illegal.
Let's take Imclone, for instance, right?
Imclone.
Let's just take that as an example. Sam Waxel, Martha Stewart, remember Martha Stewart? Yes, okay. You know, before there was an FDA approval on one of their products, the insiders in that company knew it. They acted upon it. They traded upon it.
Before the public.
Before the guy in Boise, Idaho.
All right. No, good point. John Tamny, your response to that point.
Well, lots of markets allow insider trading, and it's not as though there's an imbalance there. What's never explained is how this helps the small investor that good information isn't priced into the stock right away. That allows an investor who intends to sell to get that fair price. And if it's bad information, it allows the small investor to avoid buying the shares altogether.
John,
I don't see who's helped here.
What do you say to the argument that insiders have material, non-public info, therefore the game is rigged, John, and therefore the so-called small investors, the little people, quote-unquote, get screwed? Well, how do you react to that?
I don't think they do. I think small investors always gain from it. Insiders, they usually say those are mutual funds and hedge funds. They are investing for the small investor, obviously mutual funds, but hedge funds through their access to pension fund money. So I don't buy the very supposition. I think it's always good for the economy if we get information priced into stocks right away.
What is not good for the economy, Larry, is when investors, small investors, as John distinguishes them in his article, and I read the article. It's a very stimulating intellectually piece anyway, but I don't think it carries water because, you know, people, small investors, people who trade in Ameritrade and put their money into the stock market want to not think that it's a rigged game. You know, that was a large part of the reason that the market crashed in 29. They thought it was a rigged game. Investors who don't have confidence in the market will not put their money there. If the money's not put into the market, there will be no liquidity that these companies so desperately need, and the economy suffers.
I have one I've got to get in. Stay with me, gentlemen, just for a second. CNBC's own John Carney is out there. He's charging that these are really big. John Carney, let me just bring in quickly. We're running out of time. Why do you think this is as big as Bernie Madoff? I don't get that point. Bernie Madoff had hundreds and hundreds and thousands of victims for $50 billion. I don't even know who the victims are in this particular case.
Absolutely right. It's not the size of the victims, it's the importance of the person involved here. This is not a, some small player who got tagged with doing something illegal. If he has done what he's been accused of doing, that means that a guy who was on the board of directors of Goldman Sachs, the board of directors of American Airlines. Even more importantly, he ran McKinsey for 10 years. If this guy is dirty, this is a really big case. It goes right to the heart.
John Tammany, to make this an awful case, who are the victims? I'm trying to figure that out. Look, I'm not a lawyer. Joe may be right. The SEC may be right. You may be right. I don't know. I'm just trying to ask this funny question. Who are the victims here, John Tammany?
I can't find the victims here because what occurred brought more efficiency to the price of a share price.
Let me show you who the victims are.
Like there was a robbery victim, like a person who got money taken out of the pocket.
I'll tell you exactly who the victims are in this case. The victims are the investors in Goldman Sachs who trusted a member of their board of directors not to betray them by giving away corporate secrets to a hedge fund.
But John Tammany, to coin a phrase, the great vampire squid Goldman Sachs has made money hand over fist for its investors, John. Hand over fist.
They have, and good and bad information is always in the eye of the beholder. What they never prosecute are the times that investors lose money.
I'm out of here. John Tammany, Joe Tacopina, John Carney, you're all great. That's it for tonight's show. I'd love to debate this even more, but I'll see you tomorrow night.